So what I want to demonstrate to you today is how we go about doing that and explain to you a little bit more about the wine market. The majority of you probably don't have wine in your portfolio. I think that's probably a fair assumption. A lot of my clients prior to coming to me, they invested the lion's share of their portfolio in mainstream markets, equities, real estate, etc. But I'm a firm believer that if you want to achieve different results, you need to think differently. And certainly wine as an asset class, I will demonstrate to you, is demonstrating the kind of results which is gaining more and more attention. So, if we look at, would I invest in it? It's a separate issue. We always say, drink what you like, but invest in Bordeaux. Because a commodity can have a paper value. It means very little unless you have a buyer to realize that value. When we look at 98% of investment wines, the most traded wines in the world, 98% come from Bordeaux. So it stands to reason that if you want to invest in wine, the Bordeaux region is the one to focus on primarily, if not exclusively. Let's just have a look at production level. I mean, we've been talking all day about sort of, supply and demand. We've been talking about tools that negate the effects of inflation and poor interest rates. Let's look at why this instrument. Why wine? How can wine actually do this? How can wine beat inflation? Why is wine beating inflation? How is it negating bad interest rates? It's simple supply and demand. The production levels of these wines are so infinitely low. 15,000 cases annual production, Chateau Lafite. 18,000 Latour. 12,000 Margaux. 10,000 Haut-Brion, and 20,000 Mouton. Now you walk into, we talked earlier about early consumption wines. Jacob's Creek, I'm sure that's a name that you've all seen on the shelves, correct? Jacob's Creek, yeah? Can anybody guess how many cases of wine a year Jacob's Creek produces? Hazard a guess. Anyone? 200,000. Okay, who said that? Okay. Jacob's Creek, a year, produces 5 million cases of wine. 5 million. Now you look at those 5 million versus 15,000 and you get an understanding of why these wines are truly exceptionally rare. What these wines represent. History, class, culture, tradition. You are not buying wine. You're buying what it represents. It has an intrinsic value. And when a commodity has an intrinsic value, it will always have a cash value to someone. Warren Buffet has been mentioned a few times today. I call him Buffet because we're talking about French wine, so I'll pronounce it the French way as opposed to Buffett. I can't. Anyway, we won't go there. But Warren Buffet says, I don't like gold. It just sits there and twinkles at you. What can you do with gold? Not a lot. Wine. Well, you can drink it. Just any returns. You will not get aggressive returns. But what I can provide you is a low volatility market, a market with low correlation to the macroeconomic situation that will ascend in time gradually. It's a patient man's game. The longer you wait, the more returns you will see. Why? Every time somebody pops a bottle, it's you're the one that should be having the party, because every time somebody pops a bottle, your wines are sitting in storage in a government-bonded regulated warehouse, becoming rarer. That's what these wines run off, rarity value. See, even the angels are singing, they're so happy about this news. Okay, you would have an investment, if you had invested in wine, you would have had an investment that beats the S&P 500 by over 100% or the STI by 75% in the last 5 years. Look at what happens in 2008, I was spoken about earlier today. 2008, of course, was a calamitous time. Everything took a hit. Wine took a hit as well. But wine took a hit of up to 30%. Examine that vis-a-vis traditional mainstream markets. Values of mainstream markets were wiped off overnight between 60, 70, 80%. Wine lost 30%, yes. When Lehman Brothers collapsed, everybody was in a state of panic and everybody started selling. Wine lost only 30%. Interesting to note, financial journalists and commodities analysts at the Financial Times, they made a very salient observation. They said that wine was the last market to fall and the first to recover. Why is that? Historically, the long-term success of fine wine as an asset class is difficult to argue with. In the past 5 years, the London International Vintners Exchange Index has increased by 166%, beating all of the major share indices, including the FTSE 100 and the S&P 500. What's all that about? Well, look, major financial institutions, mainstream financial institutions, BNP Paribas, Société Générale, I'm dealing with Standard Chartered at the moment, they are incorporating Bordeaux wine, not Chilean wine or Californian wine or Romanian wine or whatever, Bordeaux wine into managed funds for their high net worth clients. Do you think that BNP Paribas or Société Générale or Standard Chartered want to compromise their relationship with their high net worth clients, their ultra high net worth clients? No, they don't. That's why they stick with Bordeaux. It comes at a price process. We're only ever a phone call away. The wines are sourced ex-chateau. This is very important. I need to talk about this. Wines are sourced ex-chateau. Ex-chateau is basically Latin. It means direct from the chateau, direct from the house, effectively. And we ensure authenticity and provenance. Now, what is that? What is authenticity and provenance in the world of wine? Provenance is ensuring that your wines are stored in the optimum condition, light, temperature, humidity, etc. I'm going to explain it like this. If there is a Margaux 04 and a Margaux, two lots of Margaux 04, 12 bottles of Margaux 04, 12 bottles of Margaux 04. One has been stored with guaranteed provenance from the likes of J.F. Hillebrand, for example, and the other one, it's been kept in a private cellar somewhere. Both are Margaux 04. When it goes to Sotheby's or Christie's auction house, I'm just giving an auction house example, the one that has been stored at the J.F. Hillebrand will fetch the better hammer price. Because so that's effectively it, ladies and gentlemen. If you are looking for an asset class that can negate inflation, combat poor interest rates, if you're looking for an asset class with low correlation to mainstream markets, if you're looking to make some serious returns, right, consider wine. Simple. Thank you for your time.
Thank you very much.